Welcome to my channel. Today's topic is Introduction to Subsidiary Books. In a business, there are so many transactions happening every day. It will be inconvenient to record all the transactions in a single journal and post all the journal entries in one ledger. There comes the need for subsidiary books. Subdivisions of journal into various books is called subsidiary books. It is not a double entry system of bookkeeping. Types of subsidiary books: cash book, purchase return book, sales book, sales return book, bills receivable book, bills payable book, journal proper. Very important to note while preparing subsidiary books. Only credit transactions are recorded in subsidiary books. Purchase or sale of asset is not recorded. What is a debit note? It is a bill or statement sent to the person to whom goods are returned. In this statement, supplier's account is debited to the value of goods returned. Credit note. It is prepared by the seller and sent to the buyer when goods are returned. Here, buyer's account is credited to the value of goods returned. It contains details of goods returned, quantity returned, and their value. Journal proper. Transactions which do not find place in subsidiary books are recorded in a book called journal proper. Invoice. It is a document prepared by the seller and sent to the buyer giving details of goods sold such as quantity, quality, price, total value, etc. All nominal accounts are closed, but business is carried on with the previous year's assets and liabilities. Journal entry made in the beginning of the current year with the balances of assets and liabilities of the previous year is called opening journal entry. Mention the subsidiary books in which the following transactions are recorded. We have to see in which book these transactions will be recorded. The first transaction is sale of goods for cash. So what is a journal entry when you make sales? Cash is coming in and goods are going out. So debit cash account and credit sales account. It is a cash transaction. So it will be recorded in cash book. The entry is cash account debtor to sales account. Cash is debited because there is increase in asset and sale is an income, so it is credited as per the nominal account rule. Credit all incomes and gains. Sale of goods on credit. It is a credit transaction. Credit transaction means cash is not received for sales made, but the sundry debtor who owes us money promises to pay us later. So it is called a credit transaction. We already discussed in introduction that all the credit transactions will be recorded in the subsidiary books. So the sale of goods on credit will be recorded in sales book. Next one, purchases of goods on credit. Here also purchases are made on credit. All credit transactions will find place in subsidiary books. So we have to open purchase book and record this purchase of goods on credit in purchase book. What is the entry for purchase of goods on credit? Purchases are coming in. So purchase account debtor credit the giver to sundry creditors. Sundry creditors are the persons to whom we owe money. So the entry is purchase account debtor to sundry creditor. We have to open purchase book and record this transaction. When the proprietor takes goods for personal use, what is the journal entry? In accounting term, whenever the proprietor withdraws money for his personal use, it is termed as drawings. The entry is drawings account debtor to cash account. So this transaction should be recorded in cash book. The next transaction is goods returned to suppliers, for which cash is not received immediately. When goods are returned to suppliers, it is called purchase returns. That means the goods we have purchased from our supplier, if found defective, will be returned to the supplier. It is called purchase return. So this transaction will be recorded in purchase return book. Asset purchase will be recorded in cash book. Assets are coming in and cash is going out. So it is recorded in cash book. What is the trade discount? It is the discount allowed by the seller to attract more customers and to receive orders in bulk. It is given as a deduction in the list price or retail price of the quantity sold. Thanks for watching. Please do like, share and subscribe.